I want to take you real quick to the beginning of this week's episode that I shot for How's the Market Pensacola, because I spent about 8 or 9 minutes explaining what happened in the stock market last week and how it affects mortgages, real estate, and how you can take advantage of it. So here's the first part of the clip. Hello, welcome to this week's How's the Market Pensacola. Now, if you've watched the show for a little bit, you know that I normally start off talking about what just happened the prior weekend, what good things, and I was planning on this week talking about Pensacola and how things work there. But I felt remiss if I don't address what happened last week in the stock market and how it affects this industry, the real estate industry. So I'm not going to be as lighthearted. I want to explain basically what's happening right now so that I can show you guys as a knowledge broker that there are some opportunities for you right now, especially when it comes to real estate and mortgages. We are experiencing, and what happened last week is what's called convexity. Okay, you can look that up. But in essence, here's what's happening. As equities drop, as the stock market drops, fund managers, big fund managers that are promising or at least trying to get a certain rate of return get scared and they come out of equities and they go into the 10-year treasury yield. Now what happens, supply and demand, as things buy into the treasury yield, the yield actually goes down some. All right, so they're making less and less and less every time they buy more yields. And as more fund managers goes, it just perpetuates. There comes a point when the 10-year treasury yield is not as attractive as the mortgage bonds that you can get. So mortgage bonds will get you pretty much the same safety, a little bit more risk, but not much. And you can hide your money or hold it until we feel like the equities markets are going to turn around and move it back in. So we've seen a lot of buy-ins into the mortgage bond world too. What does that do? Same thing it does for the treasury. That's what convexity is. Same thing it does for the treasury. It drops rates. Now, a lot of this is coming out of a scare from coronavirus. I think some of the coronavirus stuff is perpetuated by the media. That's just my thoughts. But I do believe, the equity markets dropped more last week or have not dropped like that since 2008. The housing crash, which I told you, if you listen to my 5 Minutes in Real Estate podcast or YouTube channel, I put up there that 2020, we were expecting a recession. Now, all a recession is 2 quarters consecutively with lower GDP, gross domestic product. I don't know that we are the start of this. I think this coronavirus was probably just a catalyst. That's all. What does that give you opportunity-wise in the real estate world? Well, I saw a 30-year rate last week, Friday, at 3 1/8. Now the Fed's coming out, and the Feds are I don't understand them. I think that sometimes those 12, 13 people that make these votes, I don't get. Maybe they're just old, and I'm not an age person. I don't care, but I think you just got old school thinking because they've already wasted 3 rate cuts trying to keep the stock market propped up. Now they're talking about doing a rate cut to combat coronavirus, which, I heard somebody use an analogy over the weekend. It's like, that is like pulling up to somebody that has a flat tire and offering them a chocolate bar. You're not going to do anything for it. So why would we cut that again? But if they do, in their not so infinite wisdom, you can take advantage of it because we may see rates go into the 2s, high 2s. So what's going to happen if we do? It's going to be a cycle again. We will start to see a pickup in refinances. I've already gotten some phone calls going, hey, can you help me refinance? Sure, no problem. We're going to start seeing the refinances come again because if somebody's in the 4s and they can get in the 2s and maybe change it to a 15-year note. They've only been paying 3 years on a 30, but you're in the 2s and you can get it at 15 and your payment either goes up slightly or doesn't go up at all. You just saved 12 years off your mortgage. Why wouldn't you do that? So I think that your purchases, I think this is going to perpetuate the real estate market right now. We have a problem in our area. That problem is an inventory, and I'll show you that once we get to the rest of this show. But I did not want to, I felt honestly remiss if I did not explain convexity and what's happening so you guys can see a 30,000 foot view of what's going on behind what's happening and how you can take advantage of it. Look at mortgage rates right now. It just is. Look at mortgage rates right now. They're going to be low for the foreseeable future. So low mortgage rates, low inventory, that's what's helping sellers get what they're asking for on these properties. And I'll show you the low inventory in a minute. Anyways, that's kind of what happened. There's your knowledge for the week. Again, I normally like saying, hey, Pensacola was great. They had a blast. There was a bunch of people that did gallery night, and you talk a lot about that. But I had to address, we saw the biggest stock market drop one day in history at like 1,200 and some odd points in a day. That's the Dow. Now, understand there's a little scare when people talk about the Dow. I try and follow the S&P 500 more than I do the Dow because the Dow Jones Industrial Average is only 30 stocks. They try and take one of the best companies out of each industry and put them in. Okay, they don't always. There are couples that are, 2 and 3 in the same industry. That's only 30 stocks. Whereas the S&P 500 is 500. So I think that's a bigger macro view. But the Dow dropped 1,200 and some odd points, like biggest drop it's ever had. And the Dow actually dropped 3,000 last week. Biggest drop it's had since 2008, since the crash. Do I think the coronavirus is just a catalyst to where we will continue to see equities fall a little bit? Yes, last time I checked, the stock market's actually up 200 points today. I made a couple of moves with some put options because I did well with the drop. They say bulls make money, bears make money. If you don't know what the bull's trying to go up, the bear's trying to go down. People bet when the stuff's going down. And I say bet, they invest. I shouldn't use the word bet, but some people do. And then they say pigs get slaughtered. If you try and do it all, then you're just going to die. Anyways, financially. We did some moves there. I think that we are going to continue to struggle, especially with all the talks of coronavirus and what people are going to do to deal with it. One of my biggest holdings in my stock portfolio is Disney. I've put that out to a couple of people that have noticed me. And two things happened last week. Coronavirus and the CEO, the longtime CEO, Bob Iger, stepped down all in 1 week. That stock dropped about, last I checked, that stock went from 146 to 116. So it's down $30 a share. If I didn't have some put options covering me, I would have lost a lot. But I learned a long time ago to buy and hedge. I say all this not to teach investment strategies in stocks. I understand them. You and I can have that conversation if you would like. I am not a stock analyst, though. I'm not a stock investor, advisor. I am a stock investor, but I'm not an advisor, so I can't go telling you individual stocks and what to do with them. I can just talk generalities. I try not to bring in stuff like convexity and other terms that I learned getting my MBA into this because I'd much rather just talk about what's going on here. But every once in a while, we've got to take that 30,000 foot view. And I thought this particular week, we just had to. I'm a man on a mission. My mission is to help people break through all the noise out there and don't need no permission. I want to help you get to actual truth. Don't you just want the truth?